Hello, everybody. Welcome to Talk About House. I'm Todd.
I'm Juana.
Okay, we are going to talk about why the housing crash has not happened yet.
I thought we were going to talk about houses.
We're going to talk about houses, but we're also going to talk about the housing crash. It's been 5 years in a row. There have been the annual housing crash has not come true. And if you are on Twitter, X, or any other social media where Crash Bros are, and YouTube, this one, they have all these amazing charts. We're going to go through some of the charts because I'm reading what they're saying and I'm looking at their chart and then I'm realizing their charts are completely, they've literally misrepresented info. So we're going to pick apart all the things in their charts that are absolutely false.
Okay.
And how they're using visual charts, these visuals, to mislead people about what's going on.
So it's like a deep fake?
It's not even a deep fake. It's just completely fake.
Okay.
It's completely fake. Okay. So let's start with this. Now, you guys probably remember in 2022, interest rates went from 3% to about 7%. Woo-hoo. And it happened in less than a year. Mm-hmm. And of course, everyone said immediately home prices are going to fall 40, 50%. They have to. Why? What was the logic between home prices having to fall? Like, why would they think they would have to fall 40 or 50% if interest rates doubled?
People believe that home prices would have to fall in order to bring the monthly payment down to what it would have been at the lower interest rate. Because these are people who are simply focused on monthly payment, not the overall price of the house or the value or supply and demand.
Okay, so if you just paid $1 million for your house and a year later some guy knocks on your door and goes, hey, I'd really like to buy your house. And he goes, I paid $1 million for it. Yeah, but you paid $1 million when interest rates are 3%, interest rates are 7%. So I only need to pay $400,000 because I want to have the same payment as you. What would you say to that person?
Nothing I could say in polite company.
Okay, all right. Because if that was the case, why couldn't I just run back to the bank and go, hey, my house isn't worth $1 million anymore, so I want you to drop the loan balance to $400,000. Right? Does that literally? Could you imagine doing that to a bank? That would be the stupidest thing. Okay, so. And what we're going to do is we'll put up this first chart here. This is the percent change in home prices for all of 2013. Now, as you can see by the thing, anything in blue was positive, except for state of Hawaii.
Yes.
Right?
Which is really kind of surprising if you think about it, because Hawaii definitely is the epitome of very low supply.
It is, but whatever. And remember, this is probably median prices, so if more home prices could have gone up, but if more lower price homes sold, then the median drops.
Good point.
So it's not indexed, okay? But you can see here pretty much the whole U.S. Is Nevada over there, 3.4%. So home prices they've gone up every year, and they're continuing to go up, which sort of defeats this idea of a housing crash that we've been hearing about every year now for 19, 20, 21, 22, 23, and now 24. This is the year it's finally going to happen. All the different reasons for the crash. So what we're going to do is go through some of the charts I found on social media.
Okay.
We'll talk about them.
Okay, so the one thing I want to say is that our point isn't that home prices always go up, because they don't. But over this period of time that the esteemed Crash Bros have been touting a real estate crash, they have not gone down.
If you knew for sure your house was going to be worth 50% less, why wouldn't you just sell it and then go rent for a year or two and then go back and buy a house for the same amount of money that's like twice as nice, or buy the same house back for half the price? But what's funny is these Crash Bros aren't doing that. They're touting all this crash nonsense, but then they're not selling any of their properties. I think that's very interesting. We happen to know for sure that this is the case with some of them. Okay, so here's the first chart we saw. Now, what they did, this chart has three different elements in it. This is a home price chart. That it's supposed to be a home price chart. It says real house prices at the top, but then the lines actually show that they're the indexes. The Case-Shillers are indexed. They're not actual home prices. They're indexes. Okay, because if you look all the way to the left, it even says Case-Shiller index. Adjusted using CPI less shelter. So that's another thing is they've skewed it CPI less shelter, okay, which is artificially going to make a bigger peak during years where home prices go up because of the CPI. Now, first thing to notice on this chart visually. Now,
wait, just a second. So the CPI does not reflect home prices in the sense of home values or what people purchase homes for or their mortgage payment. The CPI does reflect rent prices. So that's really very misleading when this is done.
Okay. So the first thing they do now, you probably guys, you've known this, that I spent a couple years in grad school, got an MBA, and I had a class that was, don't remember what the class was. It might have been a marketing class, but you basically learned all of these ways visually to prove your point. Okay, so what they did on this chart, first of all, was they didn't start at 0. They started at 50.
Mm-hmm.
Okay, now look, notice the chart, because the next chart I'm going to show you is a little different. Okay, starts at 50, not 0. The second thing visually they did is they used red to show what they call the Case-Shiller Comp 20. No idea what that is, but it's obviously something different because it makes a bigger impact. So they make it different with red. And then the other thing they did is this trend line. That they intentionally, as you can see, a trend line would go through what would be the median of the whole chart. But it doesn't do that. It's all the way at the bottom. So by putting this trend line at the bottom, it's like that thing when you were in school when they make the telephone wires go smaller and smaller, and then they put two people, and the guy in the background looks really big because he's so much taller than telephone wires, but he's actually the same height, right? So that's what they did here, is this trend line makes you believe that's what home prices should have done. But actually, if you think about it, tell me if this makes sense to you, okay? Just looking at his ridiculous trend line that this guy made, okay? It starts in 1976 at about 87. That's the number he's making you believe. Now remember, the CPI, prices since 76 have either tripled or quadrupled, right? In nominal dollars, tripled or quadrupled. He's saying that if a home was worth $86,000 then, today it should only be worth $120,000. So the CPI, which has gone up 4x. If you look at what airlines pilots made in 1976, they probably made $80,000 a year for a captain, and 70 or 80,000. Today make like 300,000 to 400,000 for a captain.
Right, but I mean, it just something really simple like minimum wage over this time. I mean, it's gone up more than 10x.
Minimum wage in 1976 was probably $1.20.
That's what I'm saying. It's gone up more than 10x.
In most places, yeah.
Yeah.
So you're saying, according to this, if your home in 1976, all the way on the left, was 87, he's saying, according to this trend line, it should only be worth $120 today. It's only gone up 50%. So that would mean the minimum wage today would be about $1.80, $1.80. Can you see how, first of all, this is super fake? That trend line, oh, this is what home price should have done. So anything above this is a bubble. Okay, are you guys seeing that? Because this makes no sense. And actually, if you think about it, if in 1980 or 1976 a house was worth 80,000, and let's say that's what this is, 80 is the number, all the way up there at that peaky peak of the top red is 190. So even this chart is showing homes in real dollars or indexed are only worth like 3 times as much as they were in 1976. The other thing he did is he pushed the years together so that any change would look like it's of a steeper slope, okay? Now, I want you to remember this chart. Now, remember these 2 big years of bumps. This first one was the Great Financial Crisis, which led to a housing crash, right? And it was because of foreclosures and a lot of overbuilding and bad loans. It had nothing to do with just home prices were high, right? But you can see the years 5, 6, 7, 8, 9, 10, right? And then you can see, of course, the most recent one, right? Okay, now that you have this, you've been staring at this chart here for a while, okay? Now let's go look at the Fred chart over the same amount of time, okay? This basically is charts about the same amount of time. And you can see, first of all, this chart starts at 0, but you see, if you look around 2005, 6, 7, 8, 9, 10, you can see those are actual home prices. Remember the previous chart? It looked like a huge spike and a collapse. That's what home price. That's what they did. Okay. Now, yes, home prices have certainly shot up since 2020. But remember what happened in 2021 and the beginning of 22. What were interest rates?
They were like 3%.
They were like 3%. So with 3% interest rates, people could afford to buy a lot more house. They pushed up home prices, right?
Sure.
And you can see here, home prices have been moderating, just like we said they would, adjusting back to some reasonable number. But this reversion to the mean, they will come back to the mean is complete BS. But anyway, just thought that was interesting, that first chart and then this chart. It's when you see this, you're like, how did they make that chart look the way they did? Well, they just made it up. It's not a real chart. They just made it to look that way, and then they used red to make it look like. So if you were on Twitter, X, or Facebook, and you see that chart, what do you immediately think as a consumer?
Well, hopefully as a consumer, you realize that that chart is meant to get your attention and may not actually convey true information.
Absolutely does not. Okay. The next chart I saw, I found this chart, and it really surprised me when I saw it. We had somebody come on the channel not that long ago and said, but Todd, I saw a thing that said half of the baby boomers would be dead by 2030. And I'm like, wait a minute. The baby boomers are between 59 and 77, I think. Half of them are going to be dead in 6 more years? That just makes no sense. Literally, it would take everybody over the age of 65 to die in the next 6 years. We all know it's not going to happen. So, and of course, all those homes, because the baby boomers is like 2/3 the population of the U.S., right? Apparently? No. So apparently that's what people believe. Okay. So I found this chart on Twitter that somebody was using this chart to basically say, this is proving the silver tsunami of homes that will come on the market. So when you look at this chart, you're like, oh my God. But Todd, look at the number of people that will die. By every year after 2030, 4 million, then 5 million, then 6, and 7, then 8, then all these people will be dying and all these homes will flood the market. And there's not enough people that we won't be able to have 9 million homes just in 1 year. Juana.
Yes, sir.
What does this chart actually show? This does not show how many boomers will die in a year.
No, it shows each year the cumulative. So for example, in year 1, you've got like 300,000.
Yep.
Year 2, it's a total of 600,000. So that means that the previous year plus this year is 600,000.
So
the following year, it's like 1 million. So then at that point, it's not that 1 million people die in that year. It's that the cumulatively for the last 3 years put together, it's 1 million and so on. So by the time you get to the last year and you see the 9.8, the 9.8, it's cumulative from all those years looking back to that point in time. It is not just that single year.
This is 2023 to 2035 is actually 13 years. Do not argue with the math on me. You can say, but Todd, 35 minus 23 is 12. But you have to add the year 2023, so you can't. It's not a zero.
You have to start. You have to add your starting year. Yes.
You have to add the starting year. So there's 13 years here. Over 13 years, 9 million people are going to die. Okay, so that's less than 1 million a year. It's like maybe 600,000 a year. Mm-hmm. Juana, how many babies were born in the U.S. in 2023? Do you remember?
We had over 3 million, I thought.
Over 3 million. It was actually one of the highest years ever. We had 3 million babies born. Immigration. Mm-hmm. We had legal immigration of 2 million. Mm-hmm. We don't know how many people actually came here because of the southern border, right?
Right.
Okay. But this idea, now remember, look at this 2023, it says 300,000 people. They're trying to make you believe that, these people, when these people die, they will flood the housing market. Juana, is the baby boomer the largest of all the generations? Are they currently the largest one?
No, they are not, sir.
Are they the second largest one?
I believe they're the third largest one.
They're the third. So there's more millennials. They're the largest generation. Right. There's more millennials than anybody. Mm-hmm. There's more Gen Xers, which is what Juana and I are, mm-hmm. than boomers. Boomers are the third. Right. I think because it has the word baby boom, mm-hmm. people thought, oh my God, there must have been billions. Like there must be at least 1 billion people born in the U.S. but in 20 years. It was a lot. It was just, remember, because there weren't a lot of births in the 40s because all the men were out fighting wars, and they came back, and a bunch of babies were born. But it wasn't like in a ridiculous number, because remember, millennials, and there's more people born. So when I saw this chart, I was like, what? What the hell are they saying? This makes no sense. And it even says baby boom generation born from 46 to 64 during the mid-20th century. Baby boom. But you can see here how ridiculous this is, where they cumulative. If you didn't do cumulative, this thing would be a big yawner. It wouldn't make a big deal. But so I guarantee you, somebody saw this chart and go, oh, I'm not going to buy a house. I'm going to wait 10 years, because in 10 years, 6 million boomers will die that year, and I'll just be able to go out and pick whatever the houses I want.
Not so much.
Not so much, right? Okay. Okay, so I thought that was another interesting. Let's talk about foreclosures.
Okay.
We know a lot about foreclosures.
We know a couple things, yeah.
We know a couple things. We bought, sold, flipped, or whatever, over 3,000 foreclosures. And so I keep seeing these things about how foreclosures have been rising the last 4 years. And then they use a number like, oh, well, in the last 3 years, they've doubled. And they're like, oh my God, foreclosures have doubled in the foreclosures are going to crash the housing market. Okay. So here's the chart. U.S. foreclosure activity increased from 2022, but still below pre-pandemic levels. So guys, all the way on the right, 2023, apparently 357,000 foreclosures. Arguably, it'll be more in 24, maybe 400,000 foreclosures, right? Which is certainly more than 357. Juana, we had just in 2008, we had 2.3 million. Then in 2009, 2.8 million. Then in 2010, 2.9 million. Like literally, if 400,000 foreclosures crashes the housing market, it should have crashed in 2010, 11, 12, 13, 14, 15, 16, 17, 18, and 19. Because, I mean, there were a million in 2014 and 15, and there was 900,000 in 2016. There were 600,000. So why didn't 600,000 homes crash housing in 2017, but 400,000 today is going to crash the housing market?
It's not. I mean, there's just no way to go around that, is there?
So what the Crash Bros do is they'll only show you 2021 to today, because they don't want you to understand what it was like 15 years ago when we actually had foreclosures.
Or what it's like in a normal year, like 18, 19. I mean, those are pretty normal years.
So here is what's considered the average from 2017 to 2019 was about call it 600,000, okay? In 2019, that wasn't a very big year of foreclosures. There was 105 short. 2020, we were 300,000 short. 2021, 450,000 short. We've been short foreclosures. So this rising number, they're just trying to get you on the percentage change. That's the thing I noticed that Crash Bros have been doing, is they talk about percentage change when it suits them. Like that's the thing they did with inventory. But in Florida, there's 20% more listings than there were last year. Well, last year was the lowest number of listings ever recorded. So they take that really low number and say it went up 20%. They go, that's a bubble, 20%. I mean, market can't handle 20% more homes, right?
Well, it's easy to make a point when you're using apples and oranges, because it's easy to deceive.
Right. Like if I told you that I made twice as much money as I made last year, you would be like, wow, that's really good. How much did you make last year? Oh, let's not talk about that. I just want to talk in percentages.
Yeah.
If I say I made 300,000 more than I made last year, then maybe that might be relevant. But if you talk about in percentages, then it could be substantially different. So, but anyway, so this whole thing with foreclosures, remember when you look at this chart and you're saying, they'll only talk about the last 3 years. They won't talk about that. And the bottom line is that foreclosures are so limited right now in Vegas. Let's see if you know this. How many foreclosures in the last 365 days have we had in Las Vegas? Do you know?
Can I just take a wild guess?
Yes.
Okay, wild guess. 800.
You're off by about a factor of 6.
Wow.
151. There have been 151 foreclosures in Las Vegas.
Wow.
Matter of fact, we're averaging about 3 a week. So that means if you go down there on a Monday, they might have a foreclosure in Vegas. They might not. If If you go Tuesday, they might not have any. Matter of fact, somebody that I know that spent their whole career was buying and flipping foreclosures told me they don't even go down there anymore because anything that goes for sale usually goes back to the bank. They don't even, a lot of them don't even, they don't publicly. I mean, they show up as a foreclosure, but then the bid price is so high that nobody bids on it. So it just goes back to the bank for whatever reason because it's adding in all the fines and fees and things like that.
Right.
So, and anything that is out there is super competitive because remember, there's very few of them. So we track foreclosure numbers. There has not a substantial number of foreclosures. So when you see these numbers, we're talking about, we have some months where we only have, maybe 15 foreclosures or something. 20 is a big month. So foreclosures aren't going to crash the housing market. Here's a really interesting one. I found this one online too. I don't know if the numbers are exactly right. I guess they're pretty close. This talks about how much equity people have. This is the thing I think everybody's missing. Let's talk about equity, Juana. Okay, first number here, it says 38.7% own the home free and clear. I think this is over 42 now. I think it's 43.
Okay.
We'll just go with their number, 38.7. Now that's total homes, okay? It's total homes. Then you have 28.7 have over 50% equity.
Right.
So it's 67.4%. That means you own it or you have a ton of equity. If you lost your job or had something, what are some things up your sleeve you could do to not get foreclosed? Because you wouldn't want to just give away your house that you own free and clear back to a bank or whatever, right?
Well, you couldn't. I mean, if you own the house free and clear, there is no foreclosure from a bank because you don't owe them anything.
Okay. All right. So let's say you have a house, you owe $250 on it. Your payment's $1,100 a month because you got a 3% loan, and it's worth $700,000 now, and you lose your job. Are you just going to say, I'm just let the bank take the home back?
No.
What are some choices? What are some things you can do?
Well, you can get another job. There's your first choice.
Okay. Remember, your payment's only $1,100, so you got to live somewhere. You're not going to be able to find rent for $1,100.
Right. So I'm not suggesting. I'm saying get another job.
Okay.
I'm saying make payments from savings, maybe access retirement plans, maybe have a workout plan with the bank for hardship where they give you so long to stay in the house without payments before they take any action. So there are all kinds of things that you can do. But foreclosure is not in the cards. It's not in the cards for a long time. So in Nevada, that's about 1,000 days.
Yeah, it's about 3 years. Matter of fact, the foreclosures we're seeing now, we're still seeing the pre-pandemic stuff and notice defaults were first filed. So the bottom line here is, and then it says 33% mortgage homes with less than 50% equity. What's interesting, this chart doesn't show is the percentage interest rates that we have. I remember reading that like 80% of all homes have either 5% or less, meaning they're either free and clear or you have a loan of 5% or less.
Right.
And then only 2 or 3% of all homes have over 7%.
Right.
One, in 2005, what percentage of homes that were not free and clear, okay, that had loans, had a loan under 7%?
Very few. Very few. I mean, it was probably only people who had variable rates, which those were obviously problematic. People who had interest-only loans, those may have had that. So it was really very few.
Couple, 5%.
I don't know what the percent was, but it was very few.
It's extremely small
as a
percent.
percentage of the market, yes.
Okay. The housing market is so locked up where lending, it almost feels like the combination of lending practices changing. Do you remember what the average credit score of be able to get a loan in 2005 was?
Oh, that I do remember.
How much was it?
It was basically 640.
What's the average credit score of people getting loans today?
About 740.
Okay, so the people getting loans are far more qualified today.
Yes.
Than anybody else who could just get a loan.
Yeah, I mean, we have the strictest lending standards right now than we've ever had. And a lot of that is just, again, lessons from the past, right? We've learned that we need well-qualified borrowers that borrow from whomever to purchase these homes so that we don't have another foreclosure crisis. And not only that, but we don't harm people, right? Because foreclosures harm people. When people have difficulty making ends meet, that's harmful. When people have difficulty paying for their homes, that's harmful. So we've learned those lessons from the past. So that's the reason why it's gotten much harder to borrow for a mortgage, and you have to have good credit, you have to have reserves, you can't have too much debt. So all kinds of things that have been put in place to actually protect borrowers. By making it harder for people to borrow, that actually protects the borrower, because it means that a borrower who is able to borrow is much more likely to be a successful borrower and meet their financial obligations. It doesn't help anybody if a borrower is unsuccessful and ends up in financial hardship.
There is almost zero chance that a downturn in the economy would lead to instant foreclosures and homes flooding the market.
Right. I mean, a downturn in the economy, it does not correlate directly to negative things happening in the housing market. There are a lot of other factors, and to look at it that way is really missing so many pieces of the economy.
Okay, so let me ask you a question then. So if you believe that if you own a home and you lose your job, you have to give up the house, you're just out of the house. What if you're a tenant and you lose your job? You have to move out because you can't, if you don't pay rent, they're going to evict you.
Right.
So then what do you do since you don't have a house to live in? Are you just homeless? Does this mean that everybody who's a tenant who loses their job the next day becomes homeless?
Not the next day, but certainly if you're a tenant, you're much more likely to have certainly home insecurity in that way, because if you're a tenant and you don't make your rent payment on time, the first thing that happens here in Nevada is a 7-day pay or quit, and if you do not pay, then eviction proceedings start. So you can be evicted in pretty short order, in about 30 days, as opposed to a mortgage where the borrower doesn't pay the mortgage. Like I said, it's going to take about 1,000 days. So would you rather be a tenant and be out in 30 days, or would you rather be a homeowner and be out in 1,000 days? Not only that, but if you're a homeowner, you probably have equity. So at some point you may decide to sell the home, put money in your pocket, and pay off that loan and move on, and the foreclosure never happens.
Right. Okay. Anyway, the reason I made the video is because I spent probably too much time going on Twitter, looking at all the Crash Bros Twitter pages, looking at all these charts that they made, like literally I would just read the chart and go, this is completely fake. Like nothing in this chart makes any sense. Like it makes no sense at all. But you can see how we have refuted, especially the ridiculous chart where it shows that, home prices should have only gone up 50% over the last 50 years. And anything above that's just bubble, getting ready to pop, because the ridiculous trend line and all the other using red and formatting, cumulative number of, deaths and things like that.
Right.
So completely ridiculous.
Statistics can be used and to illustrate a picture, and statistics can be misused to fulfill an agenda. The point of our video is to shed some light on these statistics and bring a little bit of truth and clarity, and hopefully inform you. Please remember to like the video, subscribe, hit the notification bell, share the video, leave us your real estate related comments. We appreciate them, and we'll see you on the next video. Bye.
Bye.